two reasons why hard money lending exists, and it should continue to exist. Number one, there is the necessity part of it, because hard money lending is typically driven on short-term money. Not and let's be honest, banks, financial companies do not like short-term money because they cannot then turn around and sell it under the secondary market. Short-term money, it moves too fast. It's paid off too quickly, and it is seen as maybe a higher risk type loan. Therefore, the secondary market for it on a national or global level just really doesn't exist. And so A, banks don't like doing that portion, but then B, the real reason why I think you want to use a hard money lender is velocity. It's how quickly you can get your money, get the deal done, get the funds you need for rehab if it's a rehab. And then after the rehab is done and the money is there to complete the project, you're in and out of that project in a matter of days and weeks, if not months, because the longer the term, if it's a longer term type loan, the longer the term is tied to the duration of amount of time it takes to qualify you for a loan. So if you're looking for a 30-year fixed rate mortgage, it takes about 30 to 45 days to process because there's a lot of steps and factors built in, like appraisals, like title searches, right, income documentation, all those things that are needed to satisfy not just the bank or the lending company, but to satisfy the secondary market behind it, so that when they package their notes, and you mentioned this, you talked about it very, very well and eloquently, 2007, 2008 taught us a lot of lessons as to how to do things right and not do things, and make sure that we don't do the bad things again or the wrong things, which is no documentation and which is negative amortization type loans. And the reason why negative loans worked or existed is because people really couldn't afford to pay their mortgage based on documented income from the get-go. So it was basically a bad deal. It was a ticking time.
And the other thing too, that Joe, that if we look back at 2007 and 2008, we had a 10-month supply of inventory in the
right,
market.
100%.
Right. So we had to keep the market churning. Nobody wanted to stop. The mortgage lenders didn't want to take a break. The builders didn't want to take a break for 6 months while we sold us off.
Right.
So they came up with another product,
Right.
And,
exactly.
And, so I was just talking with a guy, Ryan Morty, it was a fix and flip guy out of Florida. And he was talking about hard money lending, and the velocity point was really what stuck, having to be able to do something in 2 weeks, having to be able to, and you only need the money for 90 days or 120 days. And by the time you go through, WAMU, and the death by 1,000 paper cuts, I like that. I'm going to use that. You're so far down the line that you can't take advantage of the deal. But you need somebody that is explicitly in tune with the market that they're working in.